Wall Street roars back, NASDAQ up 1.7%, bull run or bear trap, a trader's perspective. Are you ready to dissect today's market surge with a trader's eye? Wall Street is flashing green, but seasoned traders know better than to jump to conclusions. Let's dive deep into the forces driving this rally and what it means for your portfolio. Monday's trading session opened with a burst of optimism, fueled by a cocktail of factors that have traders buzzing. The tech-heavy NASDAQ composite led the charge, soaring 1.7% to reach 18,087 points. This impressive jump has many wondering if the recent market turbulence is finally behind us. The S&P 500 followed suit, climbing 1.34% to 5,743 points, while the Dow Jones Industrial Average advanced 1.04%, hitting 42,119 points. This widespread rally suggests a broad-based improvement in investor sentiment, but experienced traders know that sentiment can shift quickly. This rebound comes after a challenging 4-week period marked by heightened volatility and consistent losses. Concerns over U.S. trade policies, whispers of a potential recession, and a significant sell-off in major tech stocks contributed to the downturn. The question now is, can this momentum be sustained? To understand the potential longevity of this rally, we need to analyze the key factors driving it. Is it based on solid fundamentals, or is it simply a relief rally driven by short covering and speculative buying? One of the primary catalysts for today's gains is the growing belief that former President Trump's proposed tariffs might be less severe than initially feared. According to reports in the Wall Street Journal, the scope of these tariffs could be narrower than anticipated, with potential exemptions for certain industry-specific duties. Trump himself hinted at potential flexibility in the implementation of these reciprocal tariffs, scheduled to take effect on April 2nd. This perceived softening of trade rhetoric has eased investor concerns and contributed to the positive market sentiment. Traders are closely monitoring any further developments on this front. Adding to the bullish narrative, Federal Reserve Chairman Jerome Powell reassured markets last week by suggesting that any negative impacts from Trump's tariffs are likely to be short-lived. This statement provided a sense of stability and confidence to investors. The Fed's stance implies that while there might be temporary disruptions, the overall economy remains resilient enough to weather the storm. This has emboldened investors to re-enter the market, fueling today's rally. However, traders should remain vigilant and assess the Fed's future statements for any changes in tone. The technology sector, which bore the brunt of the recent market downturn, is now leading the rebound. This resurgence suggests that investors are regaining confidence in the long-term growth potential of tech companies. Tesla, for example, surged 5.63% at the opening bell, recovering from a prolonged period of declines. Meta, formerly Facebook, climbed 3.45%, indicating renewed investor confidence in the social media giant. Nvidia, a key player in the semiconductor industry, added 2.41%, continuing its impressive performance. Within the Dow Jones Industrial Average, Boeing, plowed 2.67%, and Amazon, plowed 2.57%, also posted significant gains, further highlighting the broad-based nature of the rally. These gains suggest a potential shift in market leadership, with tech stocks once again taking center stage. While most sectors are enjoying positive gains, some defensive stocks are lagging behind. Merck & Co., 0.5%, United Health, 0.5%, and Procter & Gamble, 0.07%, are among the underperformers, suggesting a shift in investor preference towards riskier assets. This rotation out of defensive stocks and into growth-oriented sectors is a classic sign of improving market sentiment. Traders should monitor this trend closely to gauge the sustainability of the rally. At the market open, all sectors were trading in positive territory, indicating a widespread improvement in investor confidence. However, some sectors are outperforming others, providing valuable insights into the current market dynamics. The leading sectors include consumer discretionary, saw 2.42%, reflecting increased consumer confidence and spending. Communication services, PA 1.72%, benefiting from the resurgence of tech and media stocks. Technology, plus 155%, driven by strong performance from major tech companies. These sector-specific gains provide a more granular view of the market's performance and can help traders identify potential investment opportunities. The million-dollar question remains: is this the beginning of a sustained uptrend, or are we simply witnessing a short-term bounce before another pullback? To answer this, we need to consider several factors. The implementation of Trump's tariffs remains a critical factor to watch. If the tariffs turn out to be more moderate than initially feared, markets could see further gains. However, any escalation in trade tensions could trigger renewed volatility and a potential market correction. Upcoming economic data releases will provide further clues about the health of the U.S. economy. Strong economic data could reinforce the bullish narrative, while weak data could dampen investor enthusiasm and lead to a pullback. Traders should pay close attention to key indicators such as inflation, employment, and GDP growth. The upcoming earnings season will be a crucial test of corporate performance. Strong earnings reports could further fuel the rally, while weak earnings could expose underlying vulnerabilities in the market. Traders should carefully analyze earnings reports and management guidance to assess the long-term prospects of individual companies. From a technical perspective, traders should monitor key support and resistance levels to identify potential entry and exit points. A break above key resistance levels could signal a continuation of the uptrend, while a break below key support levels could indicate a potential pullback. Given the current market conditions, traders should consider the following strategies. Selective buying. Focus on high-quality companies with strong fundamentals and growth potential. Risk management. Implement stop-loss orders to protect against potential losses. Diversification. Spread your investments across different sectors and asset classes to reduce risk. Stay informed. Keep abreast of the latest market news and economic developments. What's your take on today's market rebound? Do you believe this is the start of a lasting recovery or just another short-term bounce? Share your thoughts and insights in the comments below. Let's discuss and learn from each other's perspectives. Ready to stay ahead of the curve and make informed trading decisions? Subscribe to our channel for more in-depth market analysis, expert insights, and actionable trading strategies. Hit the notification bell so you never miss an update and gain a competitive edge in the market. Start your journey to becoming a more informed and successful trader today.